Hey everyone, today I'm going to show you how to properly anticipate the silver bullet and exactly when it's coming. If you're not that good with price action yet, this will definitely help you a lot because you'll get faked out much less often. And first, we need to establish a general bias. For example, in this example, we can see that we have a strong expansion here. Here we have a large sale model that's currently developing. What else can we see? Up here we have a sweep, and finally we use end range theory with a slight modification. You can see here, if we now look at the previous candle and mark the high, then you can see that the body closed below it. If you have this combination with the sweep and here a body closed below the last candle, then you can anticipate that the third one will be the distribution candle, that the manipulation has already taken place. This is now, so to speak, the protected high, but it can also be swept. But if we really have such a large rejection, it's very unlikely. That's why we now assume that the third candle will be a distribution candle. What do we need to mark here now? The internal market maker model, that's also extremely important. With the ES we have equal lows. So where does the internal market maker end? It ends here, and after that we have these lows. If it pushes through that, then we go down here. But for our silver bullet, we mark the targets that are really obvious. And now we go into the 5-minute time frame, and what we do is at 10 o'clock we mark the open. That's here. And now we simply wait for the first M5. And you can see here that we already took out the sell set. That's why we can immediately look further to see where we have more targets. That's here. And for the ES, the targets are down here, and after that come these lows and these lows. With the ES, you can also continue to see that they are very stacked. That's also very, very nice. And with this volatility, it's not unlikely that we'll come down here if you look at it in comparison. And now you can see that after 10 o'clock, we created the M5. This is the first M5, and this will be our silver bullet. Here is the first opportunity entry simply at the M5. You can really place the stop aggressively because these M5S are extremely strong, and then you mark the lowest low, and then you can see how the chart shoots down here. Of course, you can also target a 1 to 2. What you can also do is simply look for an entry pattern in the M1 here. We can see here for the first time we have an SMT, and here you have the break. Here we have the mitigation block. We broke this low here. That's why you can enter here and then either enter here in the mitigation block or ideally at the SMA, and then you can also target a 1 to 2 here again. Exactly, and you can see that if you have clear targets and an M5, you'll often be able to hit those targets very, very nicely. We can see how this plays out here. The M5, that's the strongest one you can get. And let's say you trade a different style, you can still use this. For example, we trade towards the SMA. And let's say you can enter here on the inverse and you get in here, and now you're thinking about taking targets here, but you see that the volatility keeps increasing. Now you use the targets here and you see that an M5 is just forming here. Then, if you're still in this trade, that a potential silver bullet could form here. And then in theory, you can enter here and place the stop aggressively above the EM5, catch this move as well, and theoretically just keep trailing up to the highs. Then it breaks this low, you trail to here. It retraces, breaks this low, you trail to here. Then here it breaks this low, you can trail to here. That's what we did here. Then here it breaks this low, you trail to here, and again here it breaks this low. Here you have to trail aggressively because you don't know when it will retrace back. Here we've broken this low again. Now you can trail to here or here, depending on whether there's an SMT. Yes, there's an SMT, so you can trail to here, and here is where you'll get stopped out. But at least you could take a 1 to 22 trade here. So that doesn't mean you'll always get a move like this. First of all, the entry at the top isn't that likely now, but if you get a good entry, you can at least get more out of it because you simply know where the silver bullet forms, and that's in this M5. For this strategy, you also need to be good at determining targets. For example, in this case, we can see that it happened at 9 o'clock, and many would now say, okay, my targets are done. But that's not true, because first of all, we can see that we get a break here. We close above it. That's why the next target is up here. Our buy side for MAS is the same buy side here. Secondly, for MES, we still have these targets because the NQ simply closed above here. That's why we can now expect that the ES will also reach these. For me, the SMT is not confirmed here. For me, this is not an SMT because the NQ simply pushes above. That's why we can now also expect a retest of the mitigation block here, that we go higher, and you can see it now. And that's why we now assume that the 10 o'clock candle will do the retest here, so we can look for a long. And what do we expect now? This is now the second scenario where we're not really looking for an M5 gap, but instead we mark the 10 o'clock open and also mark it on the ES. And now we just want to see an SMT below the open so that we can then trade a continuation. You can see now with the lows here we have an SMT, and now we're just waiting for an entry pattern. For example, here you wouldn't have been filled because I like to place my limit order and not enter like that. You could have entered on the new M1. Here you wouldn't have been picked up either. That's just part of it. But that would definitely be the scenario for how you could enter here to catch the new continuation. So you basically enter into the silver bullet here because you know that the manipulation is in play, and you can then wait for the silver bullet. And after the targets were taken out here, you can see that we took out a buy side here, and for anyone who tried to short here and entered on the market structure shift, they would have gotten stopped out. But since we wait for 1 hour as manipulation, you can see that the next candle closes like this again, and then we get a sweep plus another sweep here, and now the candle closes below here within the range of the first candle. That's why the sweep is now confirmed here, and it's highly probable that we'll pull back for now. We can't see a clear sell model here. Why? Because we have a strong expansion here. That's why you can now expect that we'll go up to at most the 50% level. I would also mark that for myself on the US. Here we have the SMT. I would also expect here that one of the pairs will reach the 50% level before we could even get a continuation. And now we're just waiting for the open. Now let's mark from the 1 o'clock PM candle here and wait for an SMT. Here we potentially have a very small one. Here we still don't have a CST yet. The SMT was broken here, but we've made a new one here. And now we're either waiting for a flip from the open, that we get something like this, or a normal CST, a break of structure, inverse gap, and so on. Here you can see that we're retesting the 1 o'clock PM open here. We also have another break of structure here. That's why, in theory, you could sell here, set the stop above the SMT, and then first target the lows, and secondly, you could also target this, but never assume that we'll necessarily reach it. That would now be the best target in itself, and then you can see how the trade plays out. And here you simply get the silver bullet, and you have to imagine why this even works. If we now think that this is the 1 hour candle that opens, and we assume that this is the distribution candle, then you can see here that we make an open high. That's why the wick isn't visible at first. We go up here, create the SMA with the SMT, and then we go down, flip the open here. And as soon as we close below it, the SMA is in. And now we assume that we get a bearish candle, that we respect the open. Here we have worked through the breaker again, and then we trade the distribution downwards and basically trade the bearish candle, where we previously anticipated that it would become the distribution candle. What can we see now? We haven't reached the 50% here, but there was a fair value gap here. That's why we have something external, the internal liquidity, and then we take out what's left from the previous candle here. Now we have another sweep plus again from the previous range, and here we can expect once more that we move up and take the buy side again, that we still don't reach the 50%. For example, if you're already in the trade and you see this pattern forming, then you know things are looking bad for shorts right now, and you can close your trade here before it stops you out at break even, especially if you have lower targets. We can now see that we anticipate the third candle will be bullish again. That's why we switch to the M1 or M5 time frame. Here we can look for an aggressive trade on the M1 where we want to see a manipulation below the open. That didn't happen this time, but what did form was an M5 setup. So we mark that, and now the second scenario comes into play again, where we get the M5 trade. And here we can simply place the limit order. Again, the stop goes either below the open or below the fair value gap. That should be the the M5 is only here now. Let's place it here. So the limit order, stop below the M5, take profit at the top, and you can see here you wouldn't have been triggered. If we look more closely, we notice something here. We have the M5 here, and on the US side an M5 also formed. We need to keep an eye on that as well. And we see that we entered during this candle. That's why we can enter here now, or we can wait for a potentially better entry. That's up to you, but theoretically you could enter here. Stop below the M5 and target up here. The silver bullet should form here. Personally, I would never have been triggered in this trade because I would have had a limit order on the NQ. I don't trade US, but if someone trades US, it would have been valid as well. That's why you can use this extremely well if you're really trading reversals. For example, here, if we get another sweep, it's always the same. Sweep, and we make sure that we close within the range of the previous candle so that we get confirmation that there's real power behind the move. Then you go back to the M1, you mark the open of the next hour. That's here. And here you simply wait for an SMT below it. Even the smallest SMTs here can really trigger the move. We can also look at the open here. And what can we see here? Here we get another small SMT. So you'll often see with these moves that you really only get such small SMTs. That's why you have to be very careful. You don't always get an external one. And plus we see an extremely strong flip from the open here. Personally, I would now place a limit order here, see if we get picked up, and then that would be the continuation upwards to the targets. And you can see here, for example, this would have been a stop loss or a break even, depending on how you manage it. If you get picked up here, whether you move the internal high to break even, which I can recommend to you, that's not a problem now. We're still assuming that this candle was bearish. And now, bullish switch. Here, we've gotten another SMT below the open. Here's a CSD, then we have a nice break here, or the inverse cap. That's why you can enter here now. Again, put the stop below the SMT and the target as usual. And you can see that the second trade here turns out extremely well, works out extremely nicely. Then you could move to break even again from this point here. And that's how easy it is. Don't make it complicated. You can see for yourselves what works best for you. For me, it's the experience with the market maker models. You can see for yourselves whether larger SMTs help you or if smaller SMTs lead to more stop losses, more break evens. Of course, you have to adapt that to your own strategy. If you follow this exactly as shown, then this is a B setup and that's an A setup when you have a nice SMT. The SMT should occur below the open so that you have the SMA in the discount, and then you can always target the entire market maker model and actually exit the trade. Many who follow us know that we also use and apply pure tree ranges. You can also see that on Discord. There you learn everything about pure tree ranges, but this is knowledge you should always keep in mind in case you happen to see it during reversals or continuations of moves, so you can assess when the distribution is coming. First, for adding, for example, if you trade the SMA, you simply know that you can add here and then you don't buy randomly, but at good times. That's the first point. And secondly, you can also use this as your own strategy if you find it difficult to trade the SMA yourself. In the coming weeks, I will show so many things on YouTube that you will have no more excuses that you can say you don't know exactly what you need to do. That won't happen, so feel free to leave a like, follow, and join the Discord. There you can ask all your questions, and otherwise, I'd say see you in the next video, and ciao ciao.